Harry Boxer is a 50-year veteran and technical analyst and author of the highly acclaimed Profitable Day and Swing Trading, noted by Stock Traders Almanac as the 2015 Best Investment Book of the Year. A renowned leader in technical analysis, Harry has been widely syndicated and a featured guest on many financial programs and sites, including CNBC, CBS, MarketWatch, Winning on Wall Street, Stockhouse, Decision Point, and more. A former chief technical analyst and columnist for AmericaInvest.com, Harry's impressive credentials include 8 years as chief technical analyst with 3 Wall Street brokerage firms and the honor of winning both the 1995 and 1996 Worldwide Internet Stock Market Trading Contest, the Technical Analysis Challenge. Today, Harry continues to educate traders through the Tech Trader, an online platform that allows members exclusive real-time access to his buy and sell recommendations, market commentary, and in-depth research and analysis. You can also find him as a keynote speaker at trading conferences across the US and abroad. Okay, are you set up? I see you have your the Tech Trader up here.
Yeah, that's my website. Mm-hmm.
Okay, so you have until 5 minutes before the hour, and then we'll come in with our next batch of prizes.
Okay, well, I'm going to do just a quick introduction about show my website real quickly for a minute or two, and then I'll get into my charts, which look like this. And we'll talk about some of the trades we made today and some of my methods and how I go about doing it. So let me know when I'm ready to go.
Go ahead.
Okay. Well, folks, thanks for inviting me and thanks for being here. This is Harry Boxer of the Technical Trader, a site that's been around for many, many years, and from that's over 21. You can see that my website, techtrader.com, is a website for active traders, day traders, and swing traders for the most part. You can get into the site just by clicking on Start Free Trial, and you can sign up. Just put your name and your stuff in there, and you get a free 10-day trial with no credit cards needed. It's a really interesting site with hundreds of people in there that are very smart, astute traders that know technical analysis for the most part. Most of the people that are in my site are accomplished traders that have a technical experience. Now, you don't have to be. If you're a newbie and you want to learn about it, there's a lot of people in there that mentor, including myself. I pride myself in being a great teacher. People tell me that just a couple months in my site is like being 2 years in a classroom. Because you see the active stuff and what I do every day, just to give you a little flavor of what I do. I get online here in Los Angeles at 4 a.m., 2.5 hours before the market opens, and I go over hundreds and dozens of charts. I will say all the news items that are creating the pre-market moves, and we create a focus list for my traders. I then go over in the pre-market those charts and what they're looking like pre-market, and I go chart by chart. I show them the trends, the objectives, targets, stops, etc. And then later on, just before the market opens, we put out buy alerts, official buy alerts that pretty much indicate which stocks I prefer from that focus list that might be active day trades. It'll be like, for example, let me show you. This is during the day when I discovered a stock that I wanted, ACAD. I put out a trade on it, and with the targets and the support. But in the morning, in the pre-market, I'll put out upwards of half a dozen to a dozen stocks that may have very active, strong-looking charts, and we can do with that.
Harry, we're not seeing the charts right now. You might need to drag that tab into this window.
Right, I didn't show the chart yet.
Okay, sorry.
No problem. I just basically wanted to show you that a little bit about. You saw the trading room here, right? And I just basically put out ACAD as a day trade alert. And I just wanted to give them a flair of how I issue a day trade alert and what I do in terms of the targets and the support and the stops for the most part. This was during the day when I saw that that stock in particular was trending and maybe breaking out. I can show you that chart. During the day here when it broke out and then formed a coil, I apparently had to share a different screen, but I thought if I put everything on the same screen, it would show up. Okay, well, anyway, so in the case of ACAD, yesterday, this was a day trade for us. When it pops, and this is one of my favorite ways to trade, I look for an opening gap and run. I look for an early consolidation. I look for a low volume ebb where the market's very quiet just before it pops. When it pops here, I put a day trade on it yesterday at about 1790. And within 35 minutes, it was 19 and a half. Then it came down and broke out. And then this morning is where I put it on again as a day trade when it crossed this barrier at about 1925. And within a little bit, it was up to about a point to 2035. And currently, it's in a bullish consolidation kind of flag or coil pattern here, which tells me it's not done yet and maybe resting or consolidating and setting up in a continuation pattern for the next target, which is 21 and a quarter. I don't know if it'll get there today, but we do have a couple hours left, so that very well may happen. So back to where I was, because I was talking about, this is me, by the way, and you can see a part of my website talks about what I do and everything else. That's my daughter's, by the way. And so I want to get to what I do on a day-to-day basis. And what that is I look at, in the morning, the charts that are setting up properly for the intraday trades, like this one. This morning, though, I want to show you the chart of the day. This is my chart of the day. In the morning, we came in pre-market. This stock had popped and formed a wedge. And when it broke out here, pre-market, I put out a day trade at $1.90, $2. We don't usually trade over $2. So I waited to get over $2. It got up to 207 here and broke out. It then flagged and ran up in a 5-wave advance, typical Elliott wave move, 1, 2, 3, 4, 5, and then went into a long consolidation. When it broke out here, I put a buy alert on it. Now it immediately backed up, and I also said to all my traders, this dotted, the white dotted line is the volume weighted average price, the VWAP. As long as it didn't get below the VWAP, I was okay with holding it. It stabilized and broke back out. That was at about the 330 area where I highlighted a second day trade. From 330, it went up to 397 and pulled back in a nice little falling wedge. It did it on a fairly low volume, so I was still optimistic this wasn't done yet. The angle of ascent changed, however, still not a negative, just a change in angle. And this is what I do all day, folks. I'm showing people in live webinars constantly all day how a chart may be changing by changing angles, channels, support, resistance levels. I'm always drawing my line. People want to know why are you drawing that line? Well, the stock pulled back here, and that was its low, and that was basically at 348. Later on, it retested that level and held the 350 range. Finally, when it broke out here, look where it is. This is live and current. It is now 399 from an initial entry point at about $2. So this is almost doubled, 100% intraday today. And we held it all the way up. And why did we not sell it? Because at no point did it break a prior low. Here is support, there is support, support, support. And you notice that as the stock continues to go up, it's making higher lows, never breaking a prior low. So there's no reason to sell the stock. It's just consolidating most of the time, like in this case here, or in this case here, it pulled back and volume pulled back, and here consolidated in a bull flag as volume pulled back. Typically, in a bull trend, stocks will go up on strong volume, they'll pull back on low volume. Now, these are 1 minute intraday charts. I had a long discussion with Ralph Acampura. Most of you know him. He was stunned to see my charts when I showed him I was trading 1 minute charts, because he's a typical, investor who trades charts on daily charts. And so I learned back in 1999 when the market crashed, and I felt like I didn't want to have overnight exposure, that you can take the same patterns that appear in all time frames. If you look at the Bible of Technical Analysis, which is Technical Analysis of Stock Trends by Edwards and McGee, a book about an inch and a half thick, but it's basically the Bible of Technical Analysis, is known by many people in my end of the field, in the technical analysis field. That basically shows basic patterns, which include coils, triangles, flags, and those kind of technical patterns, which are continuation pattern. So in essence, when you look at a pattern in a pullback mode, the volume dries up as it pulls back for the most part here and here. And then at the very end, you get a little sell-off that stops the selling and it goes back up again. That happens a lot, by the way. A lot of times they won't get any kind of volume and then it'll pop. But this is a continuation flag. This is a falling wedge. This is a little smaller kind of pennant. And then a three-way move up. There's a 1, 2, 3, 4, 5 wave, typical Elliott wave pullback. And then there's your breakout. At this moment, with 2 hours to go and the stock already at 4 from $1 and change, the actual low yesterday at the close was $1.16. So this has basically gone from $1.16 to 4 in a day. Now, obviously at my site, we don't find these every day, but when we do, we take advantage of it. In this case, the vast majority of traders in my room, when I left my room, they were still holding the stock. And at this point, I told them, while I'm off the air, I want you stopping it under 345. 348 was the pullback low. I always give it a few cents leeway. But until that stock rolls over and takes out that support, we're looking for higher levels. What are my current targets? 4.25 and 4.75 if it spikes up with volume. I also will tell them that, and you're in a stock like this, and you're starting to see volume spike ups, particularly after a big run, you want to sell into the spike up. Linda Bradford Rashke, a personal friend of mine and a really nice lady, and one of the most accomplished female traders in history, coined the phrase, when the ducks are quacking, feed the ducks, which simply means when traders are clamoring for something and volume is building like crazy and the stock's already had a big run and these people are getting sucked in at the highs, that's the time to sell to them. So what I'm looking for is a blow off, spike up, buying climax, so to speak, and an opportunity to sell the stock. But my other philosophy, and it's always been this way, there's no reason to buy or sell everything at once. Buy a portion, you can buy some more there. Instead of sell, and you're out of the stock and it keeps going up. The number one question I always get from traders in my life is, how do I stay in a trend? How do I stay in a stock? I'm always selling it too early, or I'm buying it too late. It's because human emotions take over and you're not disciplined. If you're a disciplined trader, you will take a partial position, anywhere between 20 and 25% of what you want to buy. Just theoretically, say you want to buy a $20,000 position. You buy $4,000 or $5,000 worth of it. If it breaks out and it goes to a higher level and pulls back quietly and starts to move again, you can buy another quarter or a third of a position. In essence, you're scaling in, and then my philosophy has always been scale out. This morning, when this stock spiked here, I told them to sell part of their position. When it spiked here, I told them to sell some more. Bottom line is they still have half their position, but they've locked in profits. Now, with this pullback, very quiet near the apex of a wedge on a very low volume ebb, the stock popped again, and now it's pulling back a little bit. But you can see it doesn't look like it's falling apart, does it? It may suddenly roll over, but my guess is it backs and fills in here and then goes higher. And maybe by the end of today's presentation, we'll take another look at it, and you'll see the stock might be up in the 4 range or better. Another example of the kind of stock we trade. This morning, I saw an explosive move in this company called Sidus Space. Never heard of it, and I don't care. As a matter of fact, I'm a technical analyst. I trade patterns. I don't care what a company does. The only time I pay attention to fundamentals, obviously, if you're day trading, it's the daily trend that matters. Is in the morning pre-market when I want to know, why is this stock up? How powerful is the news? Is the kind of news that can propel the stock all day? Is it major contract? Is it biotech approval? Is it something that someone takes a major equity interest? Always some news that propels the stock, usually something. And in this case, it popped and flagged. And when it broke out there, this was pre-market early today, when it did that, I told my people you could take a speculative shot at a partial position around 560. Well, within minutes, it exploded to 688 for $1.20. And even then, I said, the stock's flagging, you may go higher. The tendency is to sell. I want to take my profit. I don't want my profit to disappear. Well, the way you do it here is the stock pulled back and then started to go. What you do, you put your stop right there. It runs up again, it pulls back. You could have stopped it there, or you can give it a little leeway. But in any case, you probably sold some there, and some there, and we're stopped the rest here. But that's the way I like trading. I never sell everything at once. I never buy everything at once. It's just foolish to do so, because nobody in this world knows where the tops and bottoms are going to be. Now, I'm 75 years old. I've been doing this since I'm 13 years old. And finally, it took me 20 years to get it right. But I wrote a book on this called Profitable Day in Swing Trading. You may want to look into. But I'm a big believer that the stocks move the way they want to move, and they are you got to take advantage of price movement when you see it. It's called, and you trade what you see, not what you think. The biggest problem with trading is you get fundamentally involved. This is why I try to stay away from fundamentals. The biggest mistakes I ever made is I really liked the company. I really like what they were doing. I like management. I like the product. Guess what? The stock went down. It broke support. I bought more. It went down some more. I bought more. It kept going down. That's the problem. No discipline. You have to be disciplined. You cannot trade stocks, particularly day trading, when you get these kind of speculative stocks that are spiking and running. Yeah, you can make a lot of money. You can do 50, 100, 200% in the day on certain positions. But at the same time, there's always that risk reward. You have to use stops. And the thing about trading is that money management. It's not how much you make that counts. It's how much you keep. And the way to keep stuff is by raising your stops constantly, knowing where your stop should be. In my room, if you're not sure, you ask me or you ask any trader in the room. Or you just put it out there. Does anybody have an opinion where a stop might be? But usually people come to me and ask me the question. All day I'm available to you individually. So you can private message me and I'll give you an answer if I'm available. If I'm not immediately, it'll take a little while to get to you, but I'll get to you. The beauty of, if you look at this, if I may, do you see this here in my room? If you do, you'll see that everybody's making comments here. And you can also respond to their comments. So the bottom line is that people are in my room are very, what's the word? They're very, they like teaching. They like collaboration. That's why they're there. That's why hundreds of people are with me every day, and I'm giving them advice. Some people have been with me, believe it or not, for 19 years. I have one lady who started with me the week I started, and she's still here. So anyway, back to the chart patterns. You can see that in the question of Sidhu, it exploded here. And I had a target at 9. It got up to 9:15:22 range. So most of the people sold that spike. And of course, within an hour or an hour and a half, it was down again. It then broke out again. And here it is, set up to go do a late surge. Right now, it's up 385 or 82% on only 161 million shares, on 3,000% more volume than average. So this is one of those stocks that's in play. Take a look at the current pattern right here. It's spiking as we speak to test resistance. And if it gets through, it could blow out. Volume's the key, folks. That's the thing I always look for. If I don't see volume, I don't go in. If I see volume, after I went in at a resistance level, say, for example, the stock spikes to 9.25 right here on big volume, I'll probably sell some, particularly if I bought on the breakout there or there. Take your profits when you can. Here's an interesting one that we traded today. Pre-market, the stock exploded and then went into a little flag. Now, when the market opened, it took a dip and held right at that red line, which is the 50-period moving average. And we didn't buy it, so we weren't stopped out. But when it broke out there, right there on that bar, is where I put out a buy today at 960. At 1014, $9.60. At 1215, 2 hours later, it was 1080 for a nice $1.20 trade. Now my target was 1090 to 11, so I got a dime short of my target. But you can't be greedy and wait for every last nickel. In this case, it came down to support and it's bouncing around. One of the ways we made a lot of money today was in trading the ultra shorts. I came in this morning thinking the market looks obviously lousy. The futures were sharply lower. The SQQQ, which is the NASDAQ 100 short, spiked up, ran up, and then coiled all morning. And when the market, then took a dip, and by the time the market opened, it spiked. When it broke across the triple top, I put a buy on it right here at about 64.75. Right now, it's 67 plus, and it's still going. And in my mind, the market is in dire straits here. Let's see what it's doing. This is live. I told my people that this is a 5-minute chart, by the way. NASDAQ 100. Let's put up the hourly charts in NASDAQ 100. In front of us, we have the 5-minute charts. You see the big gap down after yesterday's FOMC rally. Today's big gap down. It barely bounced and went lower. But for 3 hours, it's been forming what we call a bear coil. There's your coil. I told all my people, after I left, expect to see the markets lower while I'm away. they broke the patterns, they broke into new lows for the day. Now my target was 11,025 and then 10,9. That's right. And the NASDAQ 100, which was 16,600, has dropped 5,500 points and it's still dropping. So we're down 33% in NASDAQ, but you know what? I believe in 2000, the market was down 80 from top to bottom, 80%. NASDAQ was anyway. So I'm not saying we're going down 80%, and I also think the market's oversold here enough to have a substantial rally, but we're in a bear phase, no question. But do we care as day traders in my site? No, we don't. And the reason we don't is because we have stocks like this that are moving up. Because no matter how bad a market is, there's always 10%, 20% of the stocks going up. Now, I'm not necessarily trying to trade against the trend because I bought ultra shorts, the UVXY. We bought it this morning when it broke out over 1670 and made it up to 1765 for almost a point. The TZA was another one. It still looks like it wants to go higher. And the SQQQ we mentioned a little while ago looks like that's higher. These are at the highs for the day, and we were in at the lows for the day in the morning. So the SQQQ is up 775 or 13%. We also looked at the Chinese ETF, the Yang. Broke out of a coil, pulled back, and it's still up at about 12%. Here's the SPXU, which is the S&P 500 ultra short. We took a dip in the morning, and then by the time the market opened, it was 22.13, currently 22.75. Look, you're not going to get rich, but you're making money in a bad market. That's the key. But on the other hand, we got stocks like ADN, which I told you a few minutes ago is forming a little flag, and I said I'd check back with it. Check out this little flag that just broke out again. Now, volume's picking up as it breaks out. This is going to spike. The way these end, I can tell you, is that they'll always blow off in a kind of a rush. Everybody gets on board. That's when the professional trader who bought it down there is selling it up there. Now, there's one other possibility, because there's a triple top here, that it doesn't make it out. If it doesn't make it out, it could roll over. Watch for one big red down bar on big volume pickup, like we had here, which ended this little trend, brought it down to support. That held. But I would think that after a move that takes the stock from $1.14 to $4.05 intraday, you may very well get a sharp sell-off. But my gut feel is we break through the triple top, we run up into that 4.25, 4.30 range, and we may even blow off the 4.75 or even 5. Somewhere up in that range, I want to see a high volume thrust. I want to see a blow off on volume. I want to sell into that. I want to feed the ducks when the ducks are quacking. And so, again, when you're a day trader and a swing trader, and I do put lots of swings on. By the way, many of my swings are now shorts. I want to show you a couple. Yours truly put out a short at Carvana right there in February when the stock had broken down below the tops here and formed a bear wedge. When it broke right there, and I can tell you exactly what day it was, at 150 or 55, one of those levels. And that was 4 months ago. The low is 1980, from 150 to 1980. And it's still an ongoing short. I told them to cover here when it spiked down. And I also told them to reshort it when it broke down again because it didn't look like it was done yet. And it's not. FVRR is another tech trader swing short. When it broke down, it formed this little bear flag right in here, right there. That's where I gave you a swing short at 109. Subsequently, just a few months later, it's 29 and forming a bear wedge and breaking down with a new target of 21. Crocs, one of my favorite shorts of the year. First of all, I saw this chart going up, 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 and I just waiting for it to break. It broke here, bounced a little bit. I put a short out right there, 140. It came down the stair steps, bear flag, bear wedge, and then collapsed all the way down to 47 from 140. And guess what? After bouncing to 61, it's back to 47. My projections now are 42 and 38. Ambarella, a perfect little head and shoulder breakdown, snapback, tech trader swing short, 170. Bear flag, bear wedge, bear flag, and 5 months later, it's 170 to 65. So we were prepared at my site for the short side. Overstock broke down, rallied back. I said If it doesn't get going soon and break out, it's going to roll over. Well, it went from 60 to 25, and it looks like it's going to be in the teens eventually. ESTC broke down hard and formed the bear wedge. I went short. 117 to 50. It bounced, but it's coming down again. And if this market collapses or we get another leg on the downside, we could see the stock literally in the low 40s. It's still 62, 61. Coinbase, a lot of people love this stock. I hated it as soon as it broke there, told everyone to short under 150. It dropped like a lead balloon down to 41. Look at this one. This is one of my favorite stocks on the long side. I recommended this long here in the high 50s. Within a year, it was 350. 372 to be exact. It got slam dunked. It formed a bear coil. I said, if that breaks this coil, we're going short. It dropped down under 200, we went short. It dropped down to 54. So I used to have a nickname in Wall Street, Boxer Shorts, which I thought was kind of cute. But I was very, very good at, as much as I am good at picking stocks on the long side, I use the same exact technical analysis in reverse to find stocks that are breaking down. For example, anytime a stock has got a strong trend or a pattern and suddenly breaks like that and rallies back up in a pattern that looks like a flag or a wedge and cannot get through the prior highs, which were pretty much at that angle right there, this is called the neckline of a topping pattern. And the low volume comes in at the apex. That's called the low volume end. And then rolls over, that's where you went short at 275. Here it is at 164 and headed for 150. And I can go on and on all day with these. Gravity, one of my favorite all-time short calls. Look, another electronic gaming stock that went bonkers. Over the course of a few years, it went in 2016, this was under $1. Well, check this out. 240 from under $1. But when I saw this little pattern form here, we can go back in time and I'll show it to you. One of my favorite things to do in teaching is to go back in time and take a look at where it was at that time. Okay, this is the day it broke. I see a little mini left shoulder, head, right shoulder breakdown. Notice the moving averages crossing over. When the moving averages are in a trend, that's great. But when they roll over and cross over, it's a bear signal. Rallied right to that moving average, failed, and then broke down, and we went short at 155. Well, check out what happened since then at 155. To 41. It tried to bounce, looked like a base pattern. I got news for you, it may fail again. And if it does, it could be down in the 30s. Here's a new one we just went short on. Aqua, a double top. Short, this is the support. It got hammered. It formed a perfectly formed bear flag. And I said, if this fails, we're going short. 36 to 30 just this week. Castle's another. It broke a massive top here, formed a big wedge, and broke down there. Even when it got crushed to 16 and formed the bear flag, I said, this isn't done yet. It rallied to 22. It's back down to 16. Where can this go? My target's 14 and a half, maybe less. InMode was one of my favorite long calls right there after it came out of the V bottom with the right hand extended V. We called it a long at 1480. A year and a half later, 99. It broke here. Notice the moving averages crossed over. And then it formed the bear wedge. That's when I said this is a short at 71. 1, 2, 3, 4, 5 waves later. Down to 20 from 71. Cornet Digital was one of my favorite longs. For a long period of time, we were long the stock. But when it broke from the little rounding top and from the bear wedge, we went short. Came down, another wedge. Got hammered, bounced and formed the wedge, and it's breaking down again. From 181, the stock is now 33, and it took about 6 months. One thing about shorts I've noticed, you can make some good money on a quick short if you time it right, but the real way to make money on any stock, if it changes its trend and picks up volume on the downside. Take a look at this one red bar right there. Where did that come? Right there. Institutions were bailing right there. And when it finally broke this neckline of his head and shoulder pattern and snapped back to resistance at the moving average and couldn't roll over, couldn't get going, that rollover is where we went short there. And it subsequently got bombed. And I can show you that for every single chart. Here's a new one we recently went short on. I happen to know this business. I used to own an executive recruiting firm many moons ago. You can see that Robert Half, one of the biggest recruiters in the world, left shoulder, head, maybe a right shoulder. Anyway, the neckline's there. It broke hard this day, right there. And that's where I said, this is a short on any bounce. So I bounced here. I put out a short on it at 100. This is only not even 60 days ago. It's dropped down to 78 from 122 points. That bear wedge was an obvious one to me. My target is 73. And I think eventually 64. Very negative chart. You can see the rollover pattern, the trend. Here's the key, folks. If you can catch a stock when it's changing its trend from down to up or up to down, doesn't matter. You can make a lot of money both ways. In my room, typically today we went long the ultra shorts and we shorted the builders. Enough of this. I want to show you some of that. Lennar, I said short the first bounce or near the opening. Well, it didn't even bounce. It opened at 67.60. Currently at 63.45 for 3.5 points, or 3 points. Lennar was the other one. That was another builder. Oh, that is Lennar, sorry. DHI. At 9, it did bounce a little bit. It bounced right there at the opening. Got right up to my line at 63.75. Currently under 61. And these are just 3-point day trades. But if you use common sense and use technical analysis combined with it, you can make some real good money. Real good money. Back to some more charts. Folks, I could fall out of bed and talk about stocks for a day. So, take a look at ADN again. You ready for this, folks? How about right to my targets? I said it's going to 4.25, 440. At 448, folks. 448. And I was talking about it right here. Even after a big run, I said this is a bull flag at 385. Well, it went up 60 cents. You could have traded it right there. You buy 5,000 shares, you made $3,000. And he did it in a half hour. No, forgive me, 20 minutes. At this point, I'm selling more stock. Why? Because it's at the channel top. Stocks tend to move in channels. If you connect this top and those tops in there, a parallel channel, it's interesting that before this came about, I connected these tops and it measured out to there. And look where the stock is backing off of now, right at that target. Now, if it backs and fills and holds that zone and does a mini 1, 2, 3, 4, and a fifth wave, then I'm looking for 4 3/4 or better. And if it blows off 5 or 5.15 would be great. I don't know where, but right now, where is my stop going to be? Is there a question? Okay. My stop is right here, folks. Under 3 3/4, 375 would be stop half, stop the rest under 355 in that area. I always don't, same thing. I don't sell everything at once because if stock should get down here and I'm stopped out of my position, half my position, then I'm still good to go for the rest. I still have skin in the game and we can stay in a stock longer. But if it doesn't, then you're stopped out in tranches. Some at 3 3/4, some at 355. You average 365. If it should collapse down to this area for some reason, give back a chunk of it, you're good to go. And that's how I trade, how I put in stops, how I set targets. And it's based on 55 years of technical analysis experience, all of which is in my book, Profitable Day in Swing Trading, which is currently out of print. I'm getting the rights to it. I'm going to publish it myself. But how about that move just in the last few minutes? A 60-cent pop on a stock that already had gone up 235%. Now up 255%. A little flair for the kind of things we do at thetechtrader.com. Another one is Sega. This morning, Sega took off, pulled back, formed a little, what I call a wedge at the time. And this is what it looked like. Instead of volume pops on a wedge, which it did right there, we went long. That was at 75, I believe 1075 was the number. and my target was 11 and a half. Didn't quite get there, but we got to 11. Oh, we did get there. 11.54. So my line was off a little. Within four, it got 4 cents above my target. Most of my traders got out, and you can see what happened subsequently. But it was a nice, almost $1 trade, and it only took 2-3 hours, 2.5 hours. So if you're looking for a place to come where you can day trade ideas, have a lot of fun, and trade with a lot of really smart and personable people that like to mentor, if you need to be mentored. If you don't, come in for ideas and trade with us. You get absolute technical guidance. I can tell you right now, there's no one on my site, no one in the internet world that does what I do, that's on as often as I am, that completely gives live webinars and updates every half hour, or whenever I see something that needs to be talked about, I just jump on and talk about, say, for example, the stock is just broken down technically. It needed to have been stopped. In this case, the stop was right about there. And that's a flare of what we do at TheTechTrader.com. Now, on the swing trades, I want to show you some other stuff too. The beauty of swing trades in my room, and by the way, there's a list of swing trades like this. You go from the trading room to the watch list. You got the day trade alerts, which I put out today, all there. So you can review them at any time. Symbols are on the right. And you got the swing trade alerts, which are posted in the column over a period of time. I recently went long a bunch of stocks thinking this market may have better extension, but it didn't. And so what I tell everybody is, do not trade in my room. Do not trade in my room unless you have stops in place. I provide them. Here, entry price, stop, and targets. I will occasionally raise the targets and raise the stops when the stock is running. If it doesn't work, you're stopped out. And the beauty of this kind of a market is, if the market takes a hit and a bunch of stocks get stopped out, so what? If you're a trader, you're going to go through periods of times when the market breaks and you're stopped out. That's the beauty of a stop, to prevent larger losses. It's all about money management. You have to have skin in the game to win. Okay, there's a trade every day. Stocks are like buses. Every 10 minutes, another one comes along. Okay, so the bottom line is, I provide those ideas for you nonstop all the time. And for the most part, you'll be in a place where you'll get really good ideas at TheTechTrader.com, and you'll get guidance all along the way, nonstop all day. Now, in the case of swing trades, I will occasionally jump in and say that LCID broke support, it's stopped out, or raise your targets are stopped. But this is what I do at TheTechTrader.com on the swing side. And during the course of the day, your day trade ideas. And by the way, you'll see comments from many of the people here are very accomplished traders that are talking about the stocks in play. For example, one guy just said ADN, the only game in town with potential. Well, that's not technically true, but we sure did a great trade today with this one, didn't we? Spectacular, actually. And quite frankly, this doesn't look like a blow off top to me. So just very well, maybe not done yet. And we may get one more spike up. I don't know. Either way, though, when the stock's up this far, this fast, continually raise your stops and protect your positions. I implore you not to trade without stops. And I'm not talking about mental stops. Put the stop in the minute you make the trade. Because mentally, you will definitely find a reason not to sell something. Oh, I'll just wait a little bit longer, or maybe I should buy something that looks so good. The bottom line is, always maintain a discipline and always have your stops in place. If you take another look at this one for a perfect example, never broke this low, never broke that low, didn't break these lows, or that one, or this one, or that one, or basically, it just kept making higher lows. And it still is. That's how you stay in the trade. And even if you choose to sell some at targets, now earlier on, my targets were lower. I kept raising the targets because it kept hitting my targets. 340, 375, 380, 4. Then I had 4.25. It hit 448. My second target was 475. We may yet get there. I said 475 to 5 in that zone up here. I'm looking for at least that, unless it rolls over. You see this trend line? Always take the technicals in mind. connect these lows, this pullback, that one, and these here. Okay, even this one held. So even if it does come down to say 390, in that we're around where that red line is, that's the 50-period moving average on the 1-minute chart. Basically, that means 51-minute periods. The moving averages change, of course, but I always use, for those of you who are going to ask me, this is your VWAP. These little moving averages are 10, 21, and 50-period moving averages. Those are the ones that over the years, and through testing and testing and testing, I found are the best moving averages for intraday day trading. That's 10, 21, and 50-period moving averages. So this was an extremely successful trade. We had a few today in the midst of a very ugly market. Check back with SIGA. You see SIGA rolled over and was stopped. Yeah, we mentioned that earlier. Let's check on the indices. So you can see that those wedges broke and they're still down and dirty at the lows for the day. Now, in the overall course of things, here's your hourly chart. When I explained to my traders that we've gone from 12,900 to 11,100, 1,800 points, or about 15% just since the beginning of this month, 15%. And we're extremely oversold. We're just due for a rally. Now, whether it's a rally like this or that, I don't know. Or maybe a rally just back to the gap in resistance there. But I think the market is oversold enough for a bounce. The question is, why is any going to be buying now? By the way, Monday's a holiday. You may know, or you may not know, but it's Juneteenth and it's a holiday. And it's a new holiday they came up with to combine a bunch of things. So the bottom line is, it's going to be a 3-day holiday ahead of us. So I'm not sure that after yesterday's FOMC interest rate raise that traders are going to be too enthusiastic. But, markets will climb a wall of worry. They'll also dive on good news. They'll do what they want to do. You just have to be disciplined in finding the patterns, trading with stops, scaling in, scaling out. That's basically my philosophy of trading. You can see they're starting to a little bounce here. I also told them earlier today that they started a little bounce here, but I didn't see many real good up bars. And I certainly didn't see a negative tick. We did get to 1150. Now, usually when you see 1100 to 1200, you get a bounce. If you see 1500, it could be a major low. The problem is that the market is falling on its own weight, and who knows what's going to happen right about now with margin calls. So, so far, maybe this selling was all about margin calls, and we can now actually come back and have a little late rally. So what I tell everybody is strength begets strength. If you see a stock that's been strong all day, like ADN, for example, and the market rallies, this is a stock that's likely to really get going. SIDU rallied early, came down. This may very well explode if it breaks out over 880. And I like trading stocks with volume. I don't like trading. And by the way, AKRO, you can see it's tested 2-3 times the lateral price support. Should it get back above 1030, that could take off. But I would do nothing with it. And the number one mistake people make is they anticipate. They see a pattern they like, a coil, a pennant, or flag, or whatever, and they go buy it, and all of a sudden it rolls over on you. 2 out of 3 times it'll work. 1 out of 3 times, 33% is an awful big percent to risk by trying to anticipate. You're much better off waiting for a stock to, for example, in this case, go back above 1030 and then run to 1090, 11 a quarter, 11 and a half, whatever. But wait for that move instead of anticipating. Like I'll see people in my room anticipate a lot, and then it'll turn against them. Here's a little one we noticed earlier in the day that broke out of a base pattern at AGRI. It popped to resistance and pulled back in a wedge. So far this afternoon, it's holding that line. And what it just did is took a spurt. And take a look to where? Right at the top of that channel. So in essence, it's a 1, 2, 3, and this is wave 4. By the end of the day, we can see 255.8. We may see 265 for a scalp trade. Not a lot of money, but for day trade scalpers who like to get in and out, that could be one. AERC was a great trade this morning. Check this out. So it went sideways all night and this morning early before the opening. But before the opening, it exploded. Now, this was a pre-market trade. because it popped and formed a wedge. Let me show it to you one more time. I'll go back in time. Right there. When I see this chart that looks like this, a nice base, a breakout with volume, forms a wedge and pops out, that's where I put out a trade at 2020. It formed a coil after reaching 21 and a half, which is my target, and eventually got to 23 and change. After coming down hard, it bounced again. Here's what it's done subsequently. Big coil, see it? So now we're near the apex of the coil, or are we? Breakdown, break out, consolidate, break through the VWAP, no follow through, and now the breakdown. So this is a tricky one because a lot of times coming through that level, with a pickup in volume like that, a lot of traders could have jumped on it. On the other hand, this is why you put a stop in. If you bought the stock anywhere in the 20 and 3/4, 21.15 range, and it suddenly dropped down underneath 20.40, you're stopped out. See this bar? Trends often end with a bar like this, a big bar down on a big volume block or trade, and then it settles lower. So this would have been an in and out short loss, but a quick short loss. Redbox was another perfect example of a trade that failed. Now this morning it went 1, 2, 3, 4, 5 waves up, but that was all last night and this morning. Then pre-market had coiled. By the time the market opened, it came down. But I told everybody pre-market before it opened, this is a beautiful bull coil. If it breaks to the upside, if it breaks above 1340, we'll go long, and it's got to come with volume. Not only did it not get to 1340, it spiked to 1335 and big volume to the downside reversal, and it was done. Although we did have a nice bounce here and subsequently rolled over. Where did it bounce to? Right to the declining top line. Resistance right there. That one, you were saved if you did what you needed to and stop it right there. If you even bought it, you weren't supposed to buy it until it broke out. Now, midday, we noticed that gold was moving, and the Nugget and JNUG, two of my favorite gold ETFs, in this case, Nugget, popped and broke out above 41.75. And I told my people this is a probable good day trade. 41.75 to 44.25 pretty quickly. JNUG did the same. The actual breakout came there at 44.5 and went up to 47. So those were two little scalp trades at detectrader.com. So what I like to do is end my presentation here, because at this point, you guys have gotten a real good feel for what I do, how I do it, the methods I use. And I'd invite you once again to go to detectrader.com, start a free trial for 10 days for free, no credit card. Enjoy the room for a couple of weeks and make a lot of money while you're doing it. Many people have told me they've come into my site and made enough money to pay for 2 years worth of subscriptions. And it's for free. At the very least, you'll get a feel for whether it's for you or not, and you'll learn a lot just in 2 weeks. Take my word for it. So start your free 10-day trial. Come into detectrader.com at trader.com. You have to spell the word detectrader.com, and start yourself a free trial. If you want to learn a little bit more about me, it's all here. There's a picture of me at a screen showing to one of my day trades. And some of our services, so what people are saying, et cetera, et cetera, et cetera. And there's your swing trade price, and VIP all access means you get everything. By the way, every night I do a charts of the day video, 10 to 15 stocks that were active that day that I really like. I wanted you to see the chart on that may be breaking out. You get a weekend webinar. It's about an hour conclusive webinar that shows you all the indices, the ETFs, the main ones I follow, which are mostly semiconductor, bio, and financial. I believe those three lead the market: the SMH, the FAS, the LABU, and the XBI. I'll go over all the indicators, all the underlying indicators, about 50 to 100 longs and 30 to 40 shorts every weekend, which gets you prepared for the following week. So by looking at my weekend webinar, which I think is invaluable, and you get that on both services, but you don't get the trading room if you just want to be a swing trader. It's not necessary. But what you do get, charts of the day, the long and short swing trade alerts, the weekend overview, real-time analysis, live on-air webcasts, my live trading room access and access to me and every trader in that room. You can private message anyone you want. I think it's a great place to be, and I invite everybody to come join us at least for a couple of weeks to check us out. At this point, I'd like to take some questions from any of the listeners on any stock that they are curious about.
Harry, we do have one question. It's not on a stock, but Bernie is just asking if you exit your positions by the end of each day, each trading day.
If it's a day trade, pretty much yes. The only time, it's funny how often someone says to me, can we hold this overnight? And I'll say to them, at your own risk. I gave it out as a day trade. If a stock closes strong near the high for the day, it's very likely to spill over either after hours or in the morning. But at that point, I'm usually taking a profit. Most of the time, you get a stock that does this. It trends beautifully. And at some point, it drops off. You want to take your profit when you can. A lot of times we get a stock like ADN that just continues to go. And now it's forming yet another bull coil or bull wedge. Look at this. I bet by the top of the hour, by the time I'm off the air, the stock will be trading 4.5 or better. Pretty amazing. I told you that when it was down here that it was going up to 440. High, 448. So yeah, for the most part, we want to be in and out of stocks. Now, if you're a swing trader, a lot of my swing ideas are good for 3 to 5 weeks. Some are good for 3 to 5 months. I've had stock I put out NVIDIA at 39. It kept going. It got into the 600-700 range. So you just never know. But keep raising your stops, and sometimes the stock won't ever get stopped out. It just keeps going up. That's great. But for the most part, I'm giving you ideas in the morning that by afternoon may fade, like this one here. Okay, you just never know. That's why I'm giving you intraday patterns that we can use. But sometimes staying too long is dangerous. You can see the markets are breaking even lower now. This is why when I left, I said these are bear wedges. Expect the markets to be lower this afternoon. They are. Matter of fact, at the lows for the day right now, the tick got to 1,308. Now that's a big negative tick. Big negative tick. So we might see a late snapback rally or not. But we're near my targets at 11,000. I said we'll probably see 11,000, 11,020, and 3620 to 3600 on the S&P. So we may come down some more. Now the tick's minus 1027, very negative tick intraday. That means more than 1,000 more stock are ticking down than ticking up. Advanced declines on New York. Listen to this, folks. 235 up, 2,900 down. We're talking 12, 13-to-1 negative type ratios. Those are pretty steep. And the up-down volume is 17-to-1 negative, 17-to-1. That's huge downside ratios. NASDAQ, 700 up, 3,800 down. 5.5, 6-to-1 negative ratio there, 3-to-1 on volume. So yeah, it's a very negative day today. So Kate, there's nobody has a question about any individual stock. I'd be glad to give my opinion.
Yeah, we've actually had a few roll in. How do you see the S&P and NASDAQ on technical perspective?
Yeah, how about Tesla? I'd be interested in that one.
Sure. My projection on Tesla when it broke support here was that we're headed for this double bottom test at about 540. Okay. If it really cracks 540, there's very little support, I think, until we're looking at about 430. I'm not kidding. Now here's a stock that was trading at 1,200, and it's not trading today down 79 points or 11%. If it cracks this low, most assuredly we should see 550. That's my next target.
Okay, thank you.
You're welcome. The other question was on what? The S&P? Yeah, I had a downside projection today at 3640. Look where we are. 3640. Exactly. 149 points on the S&P in one day. But the S&P in just a few days has gone from 4168. It's gone 500 points in 7 days. 500 points. That's a big drop for the S&P. Now, the S&P is now at a level here that's cascading lower. But if you look back in this zone where there was a few highs and lows, there's a support level here. If not, the S&P projection now for me is 35, 10, 20. 35, 10, 20. It's another 100, 15, 20 points to go. If it cascades lower in a blowout smackdown climax, we could be anywhere between 3,400 and 3,275. Down in that zone on a big blowdown with major throw the baby out with the bathwater type selling climax is what's going to be needed to turn this market, at least temporarily. Any other questions?
Somebody's asking about gold.
Well, gold had a good day today. I followed the JNUG, which is a double bull for the junior gold miners. But I also like the Nugget, which is the larger cap gold miners. Now this one, look at the big reversal they had. I want to point out that this is traded at a new multi-year low today. The lowest level since 2020. It got down to 33 then. We're only at 43 now. But I don't see the patterns yet to tell me to buy gold. It's just every time they turn up, they back off again. And technically, they're still in bottoming or basing patterns, and it may take a while. If they break out, if they, for example, I follow Barrick, look at that chart. AU, I just don't see a bottom here. Anything else?
Yeah, somebody's asking about John Deere.
Well, you know that expression, nothing runs like a deer? That's their commercial. This is in jeopardy of a massive decline. And I say that because 1, 2, 3, 4 times this made a lower low and bounced, but now we're coming down again. If it doesn't hold 307, it might very well be trading at 280, 85. And for the most part, I'm thinking most stocks have to spike down and blow out before they can reverse. This is a blue chip. It's on the S&P 500. I believe it's a Dow stock. I'm not sure, but I think it is. The bottom line is it's a very precarious situation. It's got to hold here and rally, or it can cascade lower and buy as much as 20 or 30 points more. As a matter of fact, the way to project it is to draw your line. That's your declining tops line. And then I draw this line because I think that's the actual line. This is an overshoot. So we might be near support in this zone right here. But it's pretty ugly. Down 1680 or 5% for this kind of a blue chip. Look at Apple. That's incorrect. 1 sec. Yeah, this is not a correct spike. But if you look at the chart, Apple's been in a distinct downtrend since the end of March. It's basically a 1, 2, 3. But Apple is pointing to me to between 123 and 126 before it hits bottom. Sad, but the whole market needs to climax and get it over with. What's wrong with this market is every time it gets somewhat oversold, they'll bounce them a little bit and then they'll work themselves lower. But net, the trend is your friend. This is your trend on the S&P. This is only since March. We 4,600 to 3,600, 1,000 points just since March, but 1,800 points since the high, I believe. What was the high? 48, 84, something like that. And we're now at 36, 1,200 points. So it's until we actually form a bottom and reverse. See, this is why I was optimistic here. We broke the trend. We broke the declining tops line, lateral price resistance, and formed a beautiful consolidation like this is set up to go much higher. Instead, they rolled them over. And when that happened, traders saw this breaking here. This is why it accelerated like it did here. This was a nasty, important technical breakdown when most people were looking like, okay, the charts are set up. We got nice bottoming patterns in place. Looks like the market's going to have a nice rally for the next 2-3 weeks. I was expecting something up to at least 4,300. And I have people right now that I know are very, very bright that tell me that they think before we go a lot lower, that the market's going to have a very surprising rally to the upside. We shall see. I'm not in that camp yet. I was a week and a half ago before we broke down, but this is a negative bearish break. And then on top of it, they took out the lows, tried to rally back to it and failed. So you have to face reality. Reality is this market's in in a falling pattern, oversold, perhaps near low, but I'm not sure it's the low. That's the problem. And I think that concludes our talk for today.
All right. Well, that was very timely. We had everybody coming in asking about the stocks they're most worried about. So timing was perfect.
Well, if you guys have somebody after me, I understand. If not, I can stay on a few more minutes and ask.
No, we
some
have another speaker coming right up.
Okay,
We
good.
have everybody back to back on the hour. So
Gotcha. Well, thanks for
we
inviting me.
stick to the menu.
I've got it. Thanks for inviting me. Look forward to the next time. Feel free to call on me, and it was a pleasure being here. Thanks, everybody, for listening, and look forward to seeing some of you on my site.